All right, folks, this is going to be the intro to shorting. It's going to be basic information. And what I'm going to do is I actually incorporate Elliott Waves. So it might get a little bit technical for you at some point, just a little bit, but I'm going to try to keep it as basic as possible to get people to understand. I think it's really important to understand wave movements in the markets to help you identify potential shorts and longs going up the market and down the market. So, all right, guys, I'm going to pick up. I'm going to share my screen. Everybody see my screen? Cool. All right. Okay, guys, I'm gonna just do basic intro. I don't want to go over all the like administrative. I call it like the administrative stuff when it comes to shorting or even doing leverage longs or anything like that. So I'm just gonna briefly go over that and try to get to the meat and potatoes of actually shorting and just let you guys know. So I came up with a little bit of a plan, the disadvantages and advantages and exposure to the market when it comes to shorting. Let me see here. Everybody should be in there. When it comes to shorting, and all right, hold on, guys. Sorry about that. And I want to first go over the disadvantages. Get the negatives out first. I just want to do that. So when it comes to disadvantages to shorting the market, you're going to probably have a little bit more stress depending on. I put that in there. That's something that I think it's a possibility. Maybe not for everybody, but for some people, you're going to have an increase in stress. Obviously, the crypto market can be stressful with its ups and downs. And then you throw in shorts and throw in leverage, depending on the amount of leverage you want to go up to, that could cause a lot more stress. The potential losses when you're getting in there, I have almost guaranteed. I actually need to change that to guaranteed because that's the actuality. You're probably 100% guaranteed when you're just starting out with shorting, you're going to have some losses. So one of the things is that when you do have losses, just take a break. Just take a break from it. 24 hours. Go review what you did wrong, and move on from there. Don't dwell on it. It can be time consuming depending on your time frame of doing shorts and trying to find good setups. I don't chase. I like to have the market come to me and have setups, and I'll go over that in a little bit. It can take focus away from other gains. So you could be so focused on shorts that you might be missing some other opportunities in longs, for example. So that's another thing, and it's going to take time to develop your skill. You have to keep these things in mind. The losses, it's going to just take time to develop your skill. Now, the advantages of shorting is obvious. You're going to make gains when the market goes down. So instead of just hoping that the bull cycle comes back, you can actually make a little bit more money when the market is going down. You can hedge long positions. So if you say bought Bitcoin at like, I don't know, 50K, for example, and you don't want to exit out of that position, you can go into a short position on Bitcoin and short it and lever yourself or hedge yourself in that position where your losses aren't as bad. That happened. Lots of traders do that. Hedge positions on market up and downs. The other advantages to shorting is it helps you identify tops better and potentially even bottoms. So you get really, really good at being able to identify tops. And to me, that's a huge advantage. I'm going to go over an example of like when they're talking about $100,000 Bitcoin and on and on and on. Lots of guys who are good at shorts, they weren't buying it and they're like, I'm shorting right now. That was at 69K. Helps you understand the market or an asset better. If you can develop or recognize tops or bottoms, you can enter and exit more effectively. So that's the other advantage to shorts is you start understanding the market dynamics a lot better. And even guys that don't even use Elliott Waves, they start understanding waves a lot better. So you do get immense benefits from and advantages from shorting. I want to go over leverage. Leverage is just basically like your exposure to the market. I put the higher the leverage, usually the less time in the market, which can be a benefit. It also can be a disadvantage where you could be stopped out. So what do I mean by that? So if you want to use 100x leverage, you can get stopped out like that. But the guys that use 100x leverage have less time in the market potentially. So if I'm going to short Bitcoin from 69 and try to write it down to 30 as an example, you're probably not going to have that on 100x leverage. The lower the leverage, you can have more time in the market. That could be a benefit or a disadvantage, depending on how you look at it. You're less likely to be stopped out. So if you don't want to use leverage, you know, if you go to whatever exchange you are and you just put a short in, you'll see your liquidation price will be really, really high. So for example, and I'll show that later, that if I put a short in right now on Bitcoin, my liquidation price is going to be very high. My likelihood of getting stopped out is almost zero. And then you can short without leverage. You don't have to use leverage. People make the assumptions people are shorting the market, they're always using leverage. There's people that go without leverage. You don't have to use leverage, which is fine. And then just your risk tolerance of, you know, thinking about these things and what kind of strategy you want to do. There's so many different ways you can do that. Whether you want to use 5x leverage, you want to use 10x, you want to go all the way up to 100x. They're all different strategies. It's just going to depend on your risk tolerance and how long you want to be in the market. People that do the 100x are less time in the market. That's a benefit. You know, they're in and then they're out. They get in and out. People like myself, I like to go a little bit longer in the market, and a lot more things can happen when you have more time in the market. So that's just going to depend on your strategy, and I don't want to go too much into that. But let me go now to went into the. You have exchanges. Let me see, you guys. You have exchanges. I'm gonna let you know KuCoin. There's KuCoin, Bybit, FTX. I'm not. This is more the administrative part of it, and I don't want to go too much into it. But you can go to KuCoin. I like KuCoin. It is. It has a lot. You know, you can do longs, you can do shorts, and you can go to the futures trading. You can do a lot of things. One thing with KuCoin is that if you're not KYC'd, you cannot get the 100x leverage. You have to KYC with them to get up to 100x. The advantage of just leaving it without non-KYC is just 5x, but you're not KYC'd, so that's an advantage. Depends on how you look at that. But I wanted to go over this to let people know. I'm gonna turn my video off for the time being. Let people know about this right here is that there's leveraged tokens on KuCoin. Okay. All right. I just real brief. I'll go over that. I already talked about it. Leveraged tokens. This is where you can go on leveraged tokens. You can buy these without getting liquidated. What this means. What these means is 3x short. You got 3x, 3 times the leverage for a short on ADA. KuCoin does that. 3x long on Solana. So you're saying Solana is going to go long. You can buy that token. These are dangerous. In my opinion, so be careful when you're playing with these. I'll just leave it at that. Now, Futures Classic. I'm going to go into the area to let you guys know about shorts. Pretty self-explanatory, more administrative stuff, in my opinion. These you can go short all these tokens in KuCoin. You have a whole laundry list of these different tokens you can short or long. FTM, Aave, whatever you'd like to short. Let me stop the video. Okay, and then over here, it's just placing your order, your limit order, putting your leverage on over here, 1x, 2x, 3x. Whether you want to put a limit, you click that, you put a market, you want to short BTC 0.05, I put it in there. It's telling me, okay, 2,340, 223 some odd dollars out of my USDT. That's the leverage amount. It's on 5. So if you see down here, here's my cost, 472. So if I lower the leverage, I'm just going to do the whole amount, take out all the leverage. See, now my cost is 2,300 right down there. So you can play with that, your leverage amount right there. And then you will have your positions down here. One thing you want to, when you put in a contract in here and you put a limit order, say for, I think I'm going to short Bitcoin at 48,000 or something like that, and it's at 46, and you're going to you can be stuck in that contract till it hits that. So you want to be aware of that. But you can go in here and play with this and get the free $20 from KuCoin, or put in your own $20 and just play with that. A lot of people recommend paper trading before actual trading, and that is a good idea. The only thing I don't like about that is paper trading is definitely different than actual trading, the short trading. Because paper trading, you're not using your own funds. When you put your own funds into it, the whole mental process changes. So you'll see that if you want to practice paper trading without any money, and then you go into, I'm going to use my own money, the process changes a little bit. You get a little more, I guess you could say, hesitant or cautious, and it just changes the dynamics of it. So, all right. Now I'm going to go to the charts. All right, Jem, can you see my chart?
Yep.
Okay. Now I'm just getting more to the meats. I'm trying to go over this real quick. I know it's going to be really fast. As far as this other stuff, go into the charts real quick, and then we're going to get to the meat and potatoes of it. But just go back and check the exchanges, talk to people. Logical Crypto, he uses an exchange. There's KuCoin, there's other exchanges. Just go in and review and find out which one you're comfortable with. There's disadvantages to like other ones. You got to use a VPN, but then you get 100x, etc. Just go check it out. I don't want to go into it a whole lot and waste your guys' time on that part of it, because you're not learning how to short yet. Now the charts. All right. I have quite a few discussions with charts. Charts are this. It's people's behavior on the chart, period. Okay? The charts can tell you a lot of things, whether, there's a lot of information that you can get from a chart and the data on a chart. So the reason I'm saying that, there's a lot of naysayers with charts. If people are shorting and they're not using charts, I don't even know if that's possible, but most guys that are in the short market are looking at charts diligently. They're looking for opportunities and diligently looking at charts to find an opportunities to short tokens or other coins. Okay, so the basics of the charts. I wanted to go into just the basics of a chart. Let me go to a clean chart. Okay, I'm going to go into the basics of learning about shorts. And one thing you're going to want to learn that I have on here is divergences. Okay, this is the top here in right around the 13th of April, and here's a top here at the, looks like the 8th of November. What I have on here is called a divergence, or Rsi Divergence. So this top to that top, and then you have your peak on your RSI to there is called Bearish Divergence. You want to go study that. There's a chart. All you have to do is, if you're going to be a short, doing shorts, you have to, whether you're going to use Elliott Wave or not, you want to understand these divergences. You have hidden and bullish and bearish divergence, and you have regular hidden or regular bullish and bearish divergences. And you want to have that chart. There's a, if you just Google divergences, bearish, bullish, there's a nice chart that pops up. And if you're going to be in this market, you want to understand that. You want that, those divergences ingrained in your mind. Take that chart, print that thing off, and stick it up above your computer and just look at that all the time. You have to constantly be checking divergences. But anyhow, I have this chart up here, and this was a really good indication that Bitcoin's end was there. Even though right in here, everybody on the tubes and in the market and Plan B and all those other guys were talking about how Bitcoin's going to 100,000. And as you see, that likely wasn't the case. Okay. Now, the other thing is you want to check divergences on multiple time frames too, just not on one. But we can go to the weekly chart and check it. And you can see there's even more bearish divergence. And what that is that this is above and this is below. and this is up and that's down. So this is divergence between the two. And that means that the momentum has slowed way down right there because of this RSI. Okay, the RSI this is a momentum indicator. You hear people talk about a lot of overbought and oversold, which is technically correct, but this is a momentum indicator, the momentum of the market moving, and now the momentum slowing down here. So here's a weekly chart. This should have been even more of an indication that Bitcoin was not going to go to 100,000, and also an indication too, was probably time to start looking at shorts. So on the weekly, let me go to the monthly. Same thing. Here's the monthly chart. And the more time you go out, the better the indicator. But massive, on the monthly, massive bearish divergence. So just those three things. So those that were in the market believing Bitcoin was going to 100,000, just by checking a simple indicator and looking at some charts, you would have noticed, hey, that's probably not going to happen. Okay, so going through the charts and understanding divergences is very important when it comes to frankly any type of trading on the charts, and where to buy. There's traders that use just divergences to trade, so they do work. I mean, obviously just using that alone is risky, but they do work where you can find your bearish divergence in this instance here as an example, and say, okay, probably a good time to start looking for shorts. Or in this instance, here's another good example, is right here. You have bullish divergence. So down, up. And you can see there's divergence between the two. So probably in this area, a good time to go long, or this area, start looking for longs. Very important. I can't stress that enough to understanding divergences. And you want to check this on multiple time frames. You might have to go through the 1 hour down to the 4 hour. You can see, or 8 hour, for example. You might see the divergences here. Then you go to the daily. You might not see it. And what's going to happen is you're going to have to learn to develop that skill, because you can see the divergence on the 4 hour and not the 8 hour, and you're like, is that strong enough? So typically I like to see divergence depending on how I'm trading on at least the 3 or 4 hour chart. Okay, so all right, divergences. Now I'm going to go into the basics of where it might get a little bit confusing. So I'm going to go to an empty space of the chart. What I do using other things besides Elliott Waves, you have divergences, support and resistance. I'm not going to go into support and resistance too much. If you took the Q4 course or the Q1 course, you probably got the information from that, and then you can go research that on your own. So I'm going to go into the basics of Elliott Waves, and we have an Elliott wave pattern, which is called an impulse. I'm going to do this up for now, like that. And this is the market behavior right on an impulse. These work. They're 5, 3, 5, 3, 5. Fibonacci numbers. That's why Elliott Waves work, because they're Fibonacci. And what this is telling you when you see that is that this first wave is the disbelief wave. Oh, I can't believe it's going up. And the second wave is called the oh shit wave, because they can go really dramatic. So a good example is March of 2020. That second wave was probably mind-numbing to a lot of people when that thing came down. So that's the next wave. So now the momentum builds up, and it's going into a third wave. And you can use your RSI to identify this third wave. It's usually the highest peak on the RSI with the most amount of momentum. I'll show that in another example. Then you have a fourth wave that doesn't correct quite as much because there's so much momentum from this wave, so it just kind of hangs out and doesn't go down as much as that second wave. Then you have a fifth wave that pops up, and it's losing momentum because it's coming to completion of this cycle or sequence. And that's where you get your divergences from, where a lot of traders will call them double tops. These are the double tops. They say that double top, and they have a top here, at the top there, and they have the divergences. They go, oh, there it is, and I'm going to trade that. So, and then after that, you have the correction, which is an ABC. Also 5, 3, 5, and A is 5, 3, 5, and I'll correct right there. Okay. And what I trade is I look for, if I'm doing a long, let me change this around and go short for you guys. So a short is just in reverse. So 1, 2, 3, 4, 5. And then comes down. Same thing in reverse. Oh, I can't believe it. Big correction. And then the momentum increases coming down. Be the lowest point on your RSI. And then this wave doesn't come up too much. And then the fifth wave is where you'll get your bullish divergence. And then you'll have a correction like this. I put information in the chat about a chart right here. Right here. Elliott Wave theory. This is a like beautiful paragraph describing Elliott Wave theory. It's used to understand the flow of price action and market psychology. So price action here and market psychology. Important words. It attempts to identify recurring price movements within financial markets. These repetitive price movements are a result of a natural rhythm of crowd psychology, another important word, that exists in all markets. These Elliott Wave rules guides help price swing and the corrective waves helps you to recognize that. So I'm not going to go read all of that, but this is, I put this in the chat. This is a good little area to get the basics of it also. And then also from the courses that I think most of you probably took, that Charlie had recommended a book called Elliott Wave Principles by Frost and Prechner. And that's a pretty good book, especially the first 30 to 40 pages. So to let you know, in this Elliott Wave, you're going to have to put some time in to really get this down. So it'll just take some time. Let me see here. Go back to the chart. Can you now that I move to the chart, can you see the chart?
Yep, all good.
Okay, good. All right. So now we have these the five wave impulse and the 3 wave. There's other waves that are involved in Elliott Wave, and it's called the WXY wave. They're not taught. That's old. The WXY wave is new. So that's because computers and algos are involved in trading. So now you have more 3 wave moves. So I don't want to go too deep into that, but when you see Elliott Wave and you see this 5 waves, impulses and ABCs, then you start seeing these WXYs pop up. That's why. So it's the newer method of trading, because when Elliott was doing this, there weren't computers and algos. It was just primarily this. All right. So what I want to show you now, let me delete this. So let's just pretend we're in this area. We're going to pretend we're in this area right here. Okay. We've decided that this is the top. We've decided right in here, we think this is the top. And I'm going to go down a little bit closer. And that would be, yeah, right there. What is that? 69,000. Okay. So knowing I understand Elliott Waves, the market is chugging along and it comes up and we think this is possibly the top, but we don't know for sure. So that's the risk, okay, that you take when you just say this is the top, because you don't know. It could swing back down and pop right up like that. But what you can do with Elliott Waves when it comes to finding shorts is that this right here, you can identify that this is most likely an impulse wave. So let me go down a little bit closer. Is that it? Yeah. With Elliott Waves. And I say this is the top. I'm going to watch this wave come down and try to figure. I'll start figuring out, instead of entering. You can't enter in here. I don't want to go into that quite yet. But you can enter in there and identify this wave. I'm going to look at the RSI to see if I'm getting any type of divergence. Not yet, as I can see. So possibly right here, this might be a little bit of divergence right there. Little bit. So this pretty sharp wave, and it's most likely something like this. Came down for that 3, 4, 5. Okay, and you got to use the RSI. You have to incorporate the RSI to try to find these waves. So what I'm going to do when I want to short, I'm going to see that wave come down and go, okay, that's cool. That's probably a 5-wave move. And I can go like this. Whoop, wrong one. Because they're fractals. So that 5-wave will be a 3, 4, 5, for example. That will be a fractal. So the 5-wave move in there is a fractal of that move. They're all fractals. So a 5 in there, a 3 in there. This is a 5 in there. And what I can do is identify that this is a 5-wave down. I think this is the top. And now I'm looking for my setup. Right in, I would be right in this area. Once it hits right there, I'll be looking for my setup, because now I trade second waves. Because when you go into a second wave, you're going to ride down a third wave like that. Okay. So what I'm going to do here, after it came down and identified, okay, that's a 5-wave impulse, I'm going to start making myself a setup. Okay. And now what I'm going to do is I'm just going to take the fib retracement, and you got to know these numbers on Elliott Wave, and it's just pretend that this is not there. Okay. And we haven't seen it. So I'm going to be looking for a fib retracement. What I'd like to look for on a second wave is 0.5, 0.55. Come on. 0.55 to 0.78. Okay. I know this is going to get a little bit technical for doing short. So I got a 5-wave down, and it's going to come up for a second. So I know this 0.55 to 0.78 is the area. Typically, these second waves are going to retrace to 0.618, the golden pocket. And what I'll do is, once it hits that zone, I'm going to start entering in. I'll have this set up. Retracement. I'll have this set up. Be waiting for the setup. Okay. It has to hit these numbers. If it doesn't hit these numbers, don't enter into the trade. So if it comes down in a 5-wave and it just goes to 0.2382, and you've said, hey, I've identified a second wave and it only goes to 0.382, don't enter in. Because something has changed, or you got a count wrong. So don't enter in even if it doesn't hit. Even if it takes off, you just have to say, hey, it's not right. You want to have your certain criteria and your methods of doing this. If it doesn't hit your numbers, just don't go into the trade. That's what I recommend to do. So if it doesn't hit my numbers, I just don't go into it. But if it hits this golden pocket area, I can start entering in. If it keeps going back, it can go all the way back to 0.78. I can keep entering in. So how do I mitigate my risk on something like this? Well, your stop loss is going to be, depending on how much risk you want to take, but most guys that trade Elliott Waves will put it right there. So that's your stop loss. So you're entering in at this very bottom of this box, that you made that box with your Elliott Wave, your Fibonacci retracement. So right in that area, you'll start entering in and go all the way back to the 0.78. The wave 2 can go all the way up there. It's unusual, but it can go all the way up there. You want your wave 2 pretty much to stay in that box. So just think of it right now. This wave just completed, and now I have, let's say Bitcoin is over here, and I'm making this right now. I say Bitcoin's over there. I'm saying it's coming into a wave 2. So I'm making this box. I'm having my setup, and I'm waiting for it to come up into my setup. Okay, and I'm getting my stop losses. I'm like, okay, I'm going to enter in at 66,199 on BTC, more or less, in that general area. It's never going to go according to plan. It never will. It's just going to do, it just never does. But that's going to be my general area. You want to have a plan, but it won't go according to plan, if that makes sense. That's just how it is. So you got 66,199 is when you're going to start possibly entering in, or maybe a little bit before that, 65,839. So this is my stop loss. Now, if you don't want to take that much risk, you can just lower it a little bit. Say that's my stop loss right there at 68,330. If it blasts past in there and you messed up your count and it blasts past there, then you would get stopped out. So you want to keep those numbers in your mind and have in your setup. And then you want to know, okay, this is a nice wave 1. It's coming up for 2. What am I going to do for a target? What's my target? Well, you use Fibonacci extension. You go to the top of that wave 1 to the bottom, and you go to where you think that wave 2. So if it's 0.78, it's deep, but I usually hit that 0.618, which is right about there. And I'm going to look for this 1.618 right there. You can see how this third wave went right past it. You see? Right there. That's going to be the area, and I will put a box. I actually will put a box from the 1.618 to the 1.38 right in that general area, okay? And that will be the target I would be looking for. If I enter in here, that would be the target I'd be looking for right down there, and you can trade that. Now also too, this is a 4th wave, and it'll come down, possibly this was 5th right here, more than likely. Let me see, 3, yeah, probably right here, something like that. And you know, one of the things about trading the 3rd wave and then popping up onto the 4th and the 5th, this if you want to, you can do that and just write the whole thing down. But one thing about these the thirds, I think it's better just to exit out of here and take your profits, or take something off the table. You want to take something off the table as it goes down too. You see it just really chugging along. It's going to depend on how much leverage you're using, how much of the amount you're using, and you know how confident you are in it, etc. There's going to be various things to take, but you can ride this all the way down. But sometimes, you know, these can be frustrating, in my opinion, you know, because it pops back up. And it does, you know, it might even go, it can go all the way up here. And then you're like, oh my gosh, what's going on with the trade? But, you know, so sometimes it's just best to either exit out of there or take a good amount of profits right on that wave. And then you can watch it play out again. And then just go find another setup. That's what I would recommend. But, you know, or just have a plan to take some and then ride the rest of that down. The other thing is too, when this starts going down and you have your stop loss set there, you can take profits, start taking that stop loss and moving it down with it. So let's say the original stop loss is 68,472 and it comes way down here and it stops like that. Like, okay, what's going on? So you got all the way down here. You can go and just put your stop loss just right above that to protect yourself from, you know, if it just decides to go crazy or something like that, which it shouldn't out of the sequence. So you can do that. Just lower the stop loss in this scenario from up here, and you keep lowering it down. Okay.
So Greg, you mean this have a trailing stop loss, right?
Say that again.
Yeah. The more you have the stop loss moves with it.
Yeah, you can move your a lot of traders do that. It's a good strategy just to protect your profits, and to have the stop loss, moving the stop loss, trailing stop loss, and just moving it down into an area that you're comfortable with just to protect it. You can't do that. So, and it's recommended usually to do that too. So, all right. What else is there? PTC. So here's just a good example. You take your profits out. Anybody have any specific questions real quick? You put it in chat.
Is there any leading indicator that you utilize first before the RSI or no?
Yeah, you can use support and resistance. I want to go over that too much, but yeah, I would use support and resistance. I'm going to go over some example of coins here in a second, but yeah, there's other indicators. You can use the VPVR and get some confluence on everything. Certainly, that would be a good idea for sure. All right, I'm going to go into this is BTC and go over some other coins as an example. Briefly, let's go into ETH. See if there's any opportunities on ETH. Lots of people think this is topped out. Can you guys see my chart? You still see my screen like that?
Yeah, it's all good.
Okay. So lots of people are debating on what's going on right now with Bitcoin and Ethereum. And that's a good question. I still think it's going to go up a little bit. This is just my gut feeling, but here on Ethereum, it's interesting because Ethereum has just a bunch of, bearish divergence right here with it going up like that. So that's telling you it's going to go down. So there's going to be some traders that are going to go in and short this. So would that be a short opportunity? Yeah, it could be, but you might have to ride that up a little bit and then come back down. So that's going to be the disadvantage with Ethereum is that, and the reason I say that this could go up is just because what Bitcoin's doing. I think Bitcoin probably is, I'm just more partial right now to it going up a little bit, but you could enter in just based on that divergence that it's going to be at some point coming up and then going back down. But at the same time, if Bitcoin rips out of here, it could come back up and take that divergence out. So there's always a risk with trading. It could just rip right up and then take that out, and then there's no more divergence. So there is some signs that Ethereum could be coming down. So that's why important. But I think a lot of traders are looking at that going, oh yeah, look at that. And it's still in this zone, or not zone, but BTC is still in that zone, that area of, hey, what is going on? And it's very difficult. Like, here's some support and resistance as an example up in this area right here, coming over here, and it's just hanging out just below that. So you're asking yourself right now, what is the deal? Do I short or do I long? And that's a difficult decision. So I have just an example. I know this is shorty, but I had a potential area where I thought I may have put in a long, but in this situation, it did not hit my target, so I didn't enter in. See that yellow stick? I wanted to see the yellow trend line that I have right there and have that hit that. It never did, so I didn't enter in. I just said, not going to do it. Go over some other coins real quick. Solana. Is Solana? You have to ask yourself, is Solana a short? And personally, I think it's going to be. Just using Elliott Waves and looking at this has hit my box. And there's if you're looking at this just looks so bullish. Like, wow, this is going to keep going up and up. And just going over the waves and doing my analysis on that, I'm actually waiting for this to complete. What is Bitcoin going to do? It could pop up some more. That's the other thing too, when it comes to shorting assets like Solana or Kusama, it's even more risk because these coins can rip. As you guys know, they can rip. And if this count I have on this count, learn how to do shorts and understanding Elliott Waves, if this is an expanded flat, and they go like that, it's already hit the 1.618, which is in target area. But if Bitcoin decides to rip, that's why I'm not placing anything. Bitcoin decides to rip and go up a little bit higher, like to say 49 or 50K. Solana can rip right up to this 2.618 right here, and that's 190. So I do think there's going to be some opportunities coming up to short Solana, and then it'll be the same thing. Once it gets up there and you're looking for maybe some support or resistance that Solana may have on this other side to get some confluence with other indicators, you can be looking at some divergence. You can see that, you know, Solana could still take out those divergences, and you want to check it on different time frames. You know, it's going up, but this is still trending up. Like, it hasn't broken its cycle or anything yet. So I do think that for those that are in the coin, I guess it's a benefit, or for you right now, this could, if BTC is going up to 49.50, this is going to rip probably to 180 or 190. That is a possibility. Solana can go high on the RSI. But at that point, I do think on this coin, whether it's here and it's just stuck there and it doesn't rip up there, there's still going to be a short opportunity. So what I'm going to do with Solana is, once I think it's complete, I'm going to do the same thing and come into the coin and start looking for some sort of sequence down like that. And it will do it. It will do it. It might be hard to identify that sequence coming down like that. And then I'm going to wait to see, okay, it plays that out. I'm going to see what this second wave's going to do, and wait to see if it hits my targets once Solana's complete. So that five wave came down. It completed that. Okay. BTC looks like it's going down. Ethereum looks like it's going down. It's going to give me some good indication. Other markets, the DXY, for example, or the dollar is going up. Okay, checking all these things, checking the divergences, making sure. You can see the momentum is slowing on Solana. So it does appear that maybe it's slowing here. Could be a fourth wave going up for a fifth. Don't know yet. But this is what I'll be looking for. And then do the same thing like I showed you guys. Here's the fifth wave down. I'm going to look for, let's say it stopped right there as an example. I'm going to look for a retracement and do the same thing. Look at that, the golden pocket on that retracement, 0.55 to the 0.78, right in that area as an example. And say it retraces to there. And then I'm going to look for a target. So let's say it goes there. Sometimes I keep the wicks out in case you guys wondering what I'm doing. And it retraces to there. I'll be looking for a target of that 1.618, which would be $102. So Solana, you could enter in on Solana at say 140, not 140, in this area, 135 more or less, and then you could write that down to 102. Where would you put your stop loss? You'd put your stop loss right there. Okay, so you enter in at 135, you get stopped out at 143, and then you can ride that wave down. And you know, these are good to do sometimes because Solana can rip higher, and it can go down just as fast too. So so you're gonna ride that third wave down. So what are the what's the risk that I have if this happens as an example and I enter in at 135 more or less? My risk is 6.68% in that scenario. So let me that seems high. Let me lower that stop loss. I would lower that stop loss to right there. And then I enter in at more or less 135. My risk is 4% more or less. And then my gain could potentially be 23%. Okay. So
Also, Greg, are you trading and believing the fact that you can short Solana because of the news of the Coinbase listing and the partnership with OpenSea, where it's going to be listed there as well?
the Coinbase listing, you could go ahead and come on, man. I'm having a hard time hearing you exactly. Did you say that again? I caught Coinbase listing and.
Are you believing that a short opportunity will occur because of the Coinbase listing of Solana and the fact that Solana will eventually be moved into OpenSea? which is where most of the momentum, believing that what news event would occur?
Usually, I mean, I pay a little bit of attention to, I think I understand your question. You're thinking because if it's on OpenSea and it has these positive news events, that it will go up. Is that what you're saying?
It will go up, but based on the momentum of the move itself, you believe that there's potential short opportunity because of all these news factors were factored in as a possibility, and now we're seeing it come to fruition, and there's nothing else to prop up the Solana price with momentum with a potential news opportunity.
Here's one thing that I'll say. When it comes to something like that, that can influence price swings for sure. But it's going to depend on where Solana is in the sequence. So what I mean by that is, let me take this stuff off. I'll show you it as an example. Let's say as an example, these sequences with Elliott Waves, if you have the sequence correct, it is going to play that sequence out. That's the whole thing with Elliott Waves, is that you can have the incorrect sequence and it just takes off. That's why I use these Fibonacci levels before entering in, because if they don't hit them, I'm like, well, the sequence can be wrong. And if Solana is coming down in this instance, and you have those positive news signals, for example, that you mentioned about OpenSea and Solana, well, what will happen is instead of the second wave just saying coming there, well, maybe it's positive news and the second wave may pop all the way up to there. So it'll have more positive movement within the corrective move, if that makes sense. And then it'll still come down and complete that third wave. Does that answer your question?
Partially.
Partially. What else was it that you didn't understand or I didn't get?
It could occur because of those new factors in the slowing of momentum in the chart.
Because of the new news factor slowing the momentum in the chart. Well, I mean, I think what you're saying is that the waves can extend. So whether it's down, whether it's flowing down or going up, they can extend. And this is going to more technical Elliott Wave strategies where you can have a wave extend. And what happens is that if you have a peak on the RSI, the highest peak, so instance like right here, this is probably some sort of third wave on Solana, if it comes back around, instead of having slowing momentum, it could take it all out and just keep going. That's the one thing about crypto, that you can see a move like this and it could just keep going. It can actually just keep going and really, really extend in crypto. So I think that can kind of answer your question or what you're trying to ask. Just on the extensions of the waves. That's why it's important to pay attention to the waves and why these assets can just keep going up. So instead of having, for example, let me go to a blank, instead of having in this situation where it's 1, 2, 3, 4, and then up for 5, right? These waves, and typically it's the third waves, can extend. And it's like that. So this wave can extend instead of just being like that. And then you'll see on the RSI. So I go on RSI and I say, okay, this fifth wave didn't create the divergence, the necessary divergence, and it's going up. So now the third wave is just extending out, and it's making more waves within the waves, like that, the fractals. So the third wave would go there, or the third wave could end there, and it's just extending out. And then you have a nice 5 wave in there. I don't know if that answers your question about it, but news events, it's going to be, what I want to say is that it's going to be, the asset will be in the cycle. It's just the news events are just going to change things, whether this extends or let's say there's bad news in it. and then it might not move up as much, or during the fourth wave, it might be deeper. If that makes sense. It's not, it's the news the news does not run the assets. The news will have enough, you know, everybody thinks that the news made the thing go, made the asset go down, when in reality, it's just in its cycle and it's doing a correction, for example, to go down, and it's just going to have a deeper correction, but it's still going to complete the cycle. That makes sense. Did that answer your question, man?
Yeah.
Say that again, but okay. All right, man. And then another one, I just want to go over it briefly, but there's going to be some opportunities like Kusama. I made some videos on Kusama. I was talking about that. And, you know, I think that it could be a potential short opportunity for Kusama. But this too is another dangerous coin. I don't mean dangerous, but, you know, it can fly. This can just fly and rip right out of there. But this was a good example of Kusama where it's stuck right there. Let me take that off. It's kind of stuck in this area. It's hit my box, and you know there's some resistance that it's playing with. But an asset like this, like Kusama, it can rip right out of there. And you want to know these fib levels and your waves, where it possibly can go. And for Kusama, it's already hit that 1.618 on the fibs, which is 195 bucks, but this can rip to 266. It can't do that. So I'm just being cautious on Kusama with a short, because if BTC rips to 49 or 50, Kusama is probably going to rip to 260. So if you're in Kusama, that could be good news. Good news for you if you're in that coin. And it would be the same thing with Kusama. You're going to look for these waves start coming down. Let me go down to a 2-hour chart. Let me check the divergence first. So you can see on Kusama, here's a good example. 1, 2, up for a 3. This is some sort of third wave that just extended out for a 3, 4, and it's up for a 5. But you can see that divergence. So it's losing momentum. It's losing momentum right there. And when it starts losing the momentum like that, you know, you see the divergence in that area. Actually should be like this, but like that, just losing momentum. So it's coming to the end of that correction. So the likelihood of Kusama ripping up to 266 is probably not likely, but an asset like this can pull back and just rip out of there and just take out these divergences. So you just have to be careful and use other methods of confluence to make sure everything's okay. But it's going to be the same thing with Kusama. So I'm going to get into the asset and going, okay, I think Kusama's top. So let's say, for example, Kusama's top, 205. That's it. We believe that's it. And we're ready to get in to short this. So let me go to 2-hour chart. What I'm going to look for, let's just say, let's use that wave as an example. That might not be an impulse. Just, you know, I'm just going to do it as an example. This might not be an impulse. So don't think that I'm putting it here. It's an impulse. I'll let you guys know that. But let's say that's 1, 2, and it's coming down to 3, 4. Okay, just as an example. I don't want you guys to think that's an impulse. It might not be. And it's going to come down for 3 right there. So I'm going to get everything set up again and let Kusama come down. With an asset like this, I'm going to let it do more of a wave. I'm just doing this as an example, and then pop back up. Then you go to the fib retracement. Let's see. Set that up. It hit the pocket, so that's good. That 0.78, 0.56. This could be an impulse. It's hitting the numbers pretty good. Let's see. So here's a 1. Yeah, this could be an impulse actually. So here's the 1. Back up for the 2. There's my area. Came into the box. Let me check that again. Fib retracement. Yeah, the 0.618. Got the 0.618 right there, which will be the 202 on Kusama. My stop loss will be that area. 206, you can bring it down if you want. You know, but the 206, I got to enter in at 202. Can write that back, keep entering in, depending on how big of how much money you want to put in, and then have it there. Now, if we want to check for a potential target on Kusama for something like that, you get in the fib extensions, hit it right there, go to the bottom of that wave 1, and hit the bottom, that back of that wave 2, and then my target for Kusama is going to be right there. You know, I'm conservative on my targets. I'm conservative on my targets. So I use the 1.618 and go back to 1.38. So it's 184. That'd be a target. I'd look before Kusama going down to about 185. Okay. You know, these can extend too, you know, so like that can go to 2.618. So what's my risk? I entered in at 202. My risk is about 2%. There's a 2% risk. And my potential gain is, what's the gain going to be on this? 8%. So, and it's going to depend on the asset too. Kusama is an interesting asset where when it goes down, it likes to really go down, just like it likes to go up. So, all right, guys. That's it, man. Really, that's all I have. I know it's very brief and it's probably technical when it comes to Elliott Waves, but those are what I look for, just for those patterns. There's other types of trades that you can go into with Elliott Waves, like, for example, the ABC wave is a wave that a lot of guys like to trade. There's other ways to do it, but that's just the basics. That's just the basics of it, trying to identify tops and then riding a good third wave down, being safer rather than going into this asset right here. You know, it's such a risk. Is that the top? Could be, but are you willing to take that risk on an asset like Kusama and thinking that's the top and shorting it right now, hoping that it goes down? It could be. Don't know for sure. That's why I want to see. I want to eliminate that risk as much as possible and see that 5 wave come down. That's 5 wave. And then I want to see that second wave hitting those Fibonacci levels and then riding that third wave down. So, all right, guys. That's the end of the video. If you have any questions, you can ask. I'll stop recording.